Investing sounds intimidating, conjuring images of Wall Street chaos and high stakes. For most, that world feels distant. Full of stories of fortunes made and lost, this mix of potential and risk keeps many people from starting, convinced they need thousands just to begin. But that's no longer true. Today, you can start investing with just spare change. The real question is, are you willing to start small and be patient? Meet Alex and Ben, two friends with the same job and the same dream of financial freedom. Alex, cautious, invested just $1 in a broad market index fund using a commission-free app. It felt trivial, but it was a start. He risked less than a cup of coffee. Ben, more ambitious, put in $1,000 into the same fund, feeling both excited and anxious. Both started on the same day, but their approaches and their emotional journeys were very different. One started tiny and stress-free. The other, all in and on edge. The difference would shape everything that followed. In the first weeks, Alex barely noticed his investment. A cent gained or lost didn't faze him. With so little at stake, he learned how markets move, without stress. Ben, meanwhile, obsessed over every fluctuation in his $1,000, feeling elated or panicked with each swing. The stress made him hesitant to invest more, always waiting for the perfect time. Alex, seeing he hadn't lost everything, set up an automatic daily investment of $1. It was painless, less than a soda, and soon became a habit. Ben's single big investment sat untouched, paralyzed by fear of loss. Alex's small, steady contributions built a foundation, while Ben's large seed went unwatered. The lesson: consistency matters more than size. Alex was building a habit. Ben was stuck waiting. Over time, the habit would prove more powerful than the initial amount. Investing isn't about timing the market. It's about time in the market. And Alex was already ahead. Enter compound interest, the force that makes your money and then earns on itself. Alex's daily dollars added up. After a year, he'd invested $365. But his account was worth more, thanks to compounding. Even a small gain grew each year, as interest earned interest. Ben's $1,000 also grew, but only from that initial sum. He never added more. On paper, Ben's profit looked bigger at first, but Alex's portfolio grew from two sources: his steady contributions and compounding. Ben's grew from just one compounding on a stagnant amount. Alex's snowball, though tiny, was rolling and picking up speed. Ben's bigger snowball sat still, missing out on the power of momentum. The real advantage wasn't starting big, it was building, bit by bit. Over time, Alex's approach would outpace Ben's. The magic wasn't in the amount, but in the habit. That's how wealth quietly grows. Fast forward 5 years. Alex's daily habit added up to $1,825 invested, but his account had grown to about $2,300. He'd earned nearly $500 in passive growth and was now comfortable enough to increase his daily investment. Ben's untouched $1,000 had grown to $1,610. Good, but not remarkable. He regretted not adding more, watching Alex's account catch up. 10 years in, Alex had invested $3,650, but his balance was nearly $6,000. Compounding was accelerating his growth. Ben's $1,000 had doubled to $2,600, but Alex had more than doubled that, and built an unbreakable habit. The gap was no longer just about money, but about momentum and mindset. Alex's system kept building wealth. Ben's stalled. The lesson: consistent action beats a one-time splash. Wealth is built by habit, not by waiting for the perfect moment. The earlier you start, the more powerful compounding becomes, and the habit is what truly pays off. So, who really won? It's not just about the final numbers. The real victory is building the habit of investing, no matter how small the amount. Alex's success came from starting, staying consistent, and letting time do the work. The biggest risk isn't losing money. It's never starting at all. You don't need a fortune to begin. You just need to begin. The first dollar is the most powerful. It breaks inertia and starts compounding. Investing isn't exclusive. It's for everyone at any amount. Pay yourself first, automate it, and let compounding work for you. Combine both approaches. Start with what you can and add to it regularly. Don't wait. Start now. Your future self will thank you. The best time to plant a tree was years ago. The second best time is today.